Good evening to everyone that's tuning in tonight. What's going on, man? How y'all doing this evening? How y'all doing, man? We gonna give it a few minutes to let people come on in here. Hey, man, how long we be here is up to y'all. You know, hey, I know I ain't got no huge platform. I don't know how many people gonna pull up. I put it out there this morning on the live. I put it out there on the Birdie Bird app this morning. You know what I'm saying? I let the people know. And now I'm here. So now, while we wait for people to come in, what I'm gonna do while we waiting on folk to come in, I'm gonna put the link in the chat and I'm gonna pin it to the top of the chat. And then we gonna get to it, man. We gonna get to it. We can with the link, we can have up to 9 people at a time can come on stage. Up to 9 people at a time can come on stage. So if more than 9 people want to pull up and ask questions, then we'll have to, people will have to leave the stage to let other people come in. I'm not in the Discord tonight. All right. I'm not in the Discord tonight. I will send out a back signal in the Discord just in case somebody notifications ain't turned on. Let me go pin this link to the top of the chat. Pin a link to the top of the chat. You to the tube. You to the tube. Kamala got an ugly neck. Look at Kamala neck. Kamala got an ugly neck. She got an alligator neck. Pinned to the, okay. So the message is pinned to the top of the chat. Oh man, mine ain't delayed at all. Why y'all be taking so long to answer me? I'm looking at how it ain't delayed at all. It's on like a few seconds delayed. Let me see how many seconds it's delayed. Let me get my stuff. Y'all click the link if y'all want to pull up, man. Click the link and pull up so we can get this started. All right, so I'm gonna click it. 1, 2, 3, click. Six seconds. I'm gonna say 7 seconds delay. So from now on, I don't want no more. I don't want to have nobody tell a couple minutes. Okay. We got the first person pulling up. Sam B. What's up, Sam? Sam, the first person pulling up. Like I say, we can have up to 9 people on stage. Everybody ain't gonna be on the talking at the same time, but we can have up to 9 people backstage, right? We can have up to 9 people backstage. So the link is pinned to the top of the chat, right? Hold on, wait a minute before I get into it. Good evening. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not the first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, by a slither of my huge imagination, you don't know who I am. My name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's Big Spy for those that don't hablo Espanol. And tonight is a very special night. We are doing the Not Like They Not Like Us Q&A session where I'm doing free one-on-ones for anyone who would like to pull up by clicking the link that's pinned to the top of the chat, right? This link right here is pinned to the top of the chat, and you can pull up and get yourself a free, yes, free. Where's my Fancy Dancy? Come here, Fancy Dancy. Fancy Dancy, where are you? You can't see it because I got it on full screen. Right? Right there. Free 101. You can get a free 101 tonight. What's a 101, Tim? I don't know what a 101 is. A 101 is a type of consultation, for lack of better terms, right? Where you sit down with someone that you believe to have more experience, knowledge, something to offer on a subject matter, a business, anything. You look at them as somebody, as a subject matter expert, and you pay them a fee to sit down with them for an agreed upon amount of time. It's usually like 45 minutes to an hour, right? And you pay them X amount of dollars to pick their brain, right? That's what a one-on-one is. But I'm doing it tonight for free for anyone who wants to ask questions when it comes to day trading, swing trading. I trade the ICT concepts. So if you have questions about how to trade the ICT concepts, hey, I'm your man. But if you have just general questions about the market, if it's something that I know, I'll answer it. If it's something that I don't know, I'll say, I don't know nothing about that. Right? So let's go. Sam B, you on stage. What you got? Sam B.
Tim, what's going on?
What's good with you, man? Can y'all hear Sam B? Put a 1 in the chat if y'all can hear Sam. Say something, Sam.
What's going on? What's going on, everyone?
What's happening? Y'all put a 1 in the chat if y'all. Oh, what's up, Kashaya? Hi, Tim. At work, but going to try to chime in a bit later. Keep up the good work. If not, I'll keep coming. LOL. Giddy giddy. Yeah, they hear you. What you got, Sam?
I word. So earlier today on the live, you said that you were looking at on the 15-minute, you were looking at not the initial fair value gap, but one below it. I don't know if you remember saying that.
Okay, let's look at the chart and see if I could remember what I said. Okay, you said I was on the 15-minute.
I believe you're on the 15-minute. Yeah.
Okay, 15-minute, and that would have been this morning.
Yeah.
So yeah, somewhere right. Let's cut some of the stuff off so I can see. Okay, so this right here is up. This is well after I got off right there. So I cut this stuff off right there. Right. Was I still on at that time?
Yeah, that line you made on live. You were on live when you made that line.
Okay, so
and then I think that gap right there between the two green to the left, I believe, or
okay. Well, we was watching on the 5-minute. We was watching on the 5-minute, but I remember saying I don't want a closure below this on the 15-minute, right? And I was like, I remember this, right? I remember that area there, right? Oh yeah, because somebody was like, this looked like a short to go short in this area on the 5-minute, like right here. They were saying this is a 2022 short to go, and I was like, I wouldn't take that as a short because we already mapped it out, coming down, yada yada yada. Okay, so this is the chart we was watching, right? We was watching the 5-minute. Let me knock some of this stuff off, right? So we was watching the 5-minute. And right around here, like coming up into this, is when they start talking about this was looking like a short, right? So they was talking about this was looking like a short. So I know we was on the live at this time. Now, so like I say, on the 15-minute, right? I was looking at this. I said we had just taken out this high. This was an intermediate term high, right? We took out this, we had just tapped into this intermediate term high right there on this candle here. We went up, we barely poked above the buy side. And I said, since we took out this intermediate term high, I'll be looking for price to give a deeper retracement, right? Coming below this low, and I'll accept us sweeping this low, but I don't want a closure below this low on the 15-minute, right? And so this was our deeper retracement. And then on a 5-minute, these were the imbalances in here. And I said that yeah, I wasn't looking at no imbalance. I said I want to see a sweep of this. Then we got the sweep. And I said we got a closure below here.
And then we shot up. I remember
you saying that and then we engulfed this. And I said this was the change in the state of delivery, right? And then we traded back into that order block to the change the state of delivery. And I said if we invert this, that will be another type of change the state of delivery, saying that we want to go up. Right, this was the change of state of delivery, so you can get in early here, or you can wait to that invert, which we got on this candle, as your confirmation to the change of state of delivery, and you will be looking to trade off of that. Now, those the only imbalance I remember talking about. So, is any of that what you was talking about?
Yeah. So, like, two questions out of that is like, what makes it, if you go to the 15 or to where you see the intermediate term high, like, I remember studying the 2022 and ICT speaking on intermediate, but I never really got it. So like two questions, like what makes this an intermediate? And then like, why did you ignore, or not ignore, but like put more focus on like, I don't want to see it close below this low when there's another low above it. You know what I'm saying?
Right here?
Yeah. And you say you put your focus on this one.
Oh, in this case right here, I was saying I'm willing to accept price coming here, but not closing below there, because this low right here, like this low here, right? That low there, that's a part of this move.
Right.
You see what I'm saying? So yeah, like you got this entire move, and then it's broke up into two sections like this. You see what I'm saying? So coming down to here would be fine. You know what I'm saying? Coming down to there would be fine. But in the sense of this entire move right there, this would be a sweep of liquidity to take people out who was in the right move. You see what I'm saying? And so whenever you see price take out an intermediate term high, but you don't really dig into your draw on liquidity, you can expect a larger retracement, and that larger retracement typically is going to take somebody out that was on the right side and scare them thinking, oh man, I was wrong. You see what I'm saying? I was wrong. And then once they get scared, then they out there trying to take a 2022, because this is the pattern of a 2022. You know what I'm saying? It's after 10 o'clock. We just touch buy side. We got a break in market structure. You see what I'm saying? Then you trade back in there, and you don't realize the draw on liquidity up here, because the first rule of the 2022 is understand what the draw is. You see what I'm saying? But if you don't know the draw, then you now you got knocked out, right? This knocked you out right here, right? So then you're like, oh, I was wrong. I see the 2022 short setting up, and then you come back, put your stop there, and then it come back up and knock you out again. You see what I'm saying? So, but as far as what makes this an intermediate term high is nothing more than, in its simplest form, I keep everything simple. You know what I'm saying? Intermediate term high, right, is a swing high, right? You God dog it. What is it doing? Get out of here. Okay, a swing high. So it ain't gonna be, we ain't gonna try to make it super pretty, right? So we got a high with a high on this side and a high on that side, right? That's a swing high. right? And then an intermediate term high is nothing more than a swing high with a swing high to the left that's lower and a swing high to the right that's lower. You see what I'm saying? It can be, it can be it can be like a swing high. It can be a swing high, a swing high, and a swing high right next to each other, or it can be a swing high over here, then a swing high over here. Long as it's, you know what I'm saying, got a swing high to either side. Now, it ain't just at, like with everything with ICT concepts, it ain't just at any time when you're looking for this stuff. You know what I'm saying? You following the money where you come and you make a short-term high here, and then prices trade, and then you make a short-term high there, and prices trade, then you make a short-term high there. You know what I'm saying? There's your intermediate term high. And then when price trades back up here and take out that intermediate term high, if price is still bullish, you can anticipate price to come down and take out some type of sell side, you know what I'm saying, on a deeper retracement before continuing up. And the same thing on the downside too. You know what I'm saying? Right. Okay. So that's what makes it an intermediate term high, because you got, you know what I'm saying, you got like a swing high with like a swing high over here somewhere and a swing high over here somewhere, right? And then when price was trading up, right, we took that out, and when we started retracing back down, we anticipated a deeper retracement, because as you take out, because a intermediate term high, its job is to protect, its job is to protect the market from going so far, and the intermediate term lowest job is to protect it from going so far. So when you start taking those out, that's the market saying, I want to go further, right? Taking out short-term highs, that's just a hint that it might want to, but once you take out that intermediate, that's more of a confirmation, I want to go further. You see what I'm saying? And so what that look like in price, right? What it looks like in price for this example that we was looking at, turned the wrong thing on. Where's my, oh, there it is, right? What that looked like in price for this example, what we was looking at, right? You see here, we got this, God dog it, Tim. We got this high up here, right? And then we got a swing high over here, right? And we got a swing high over here, right? So we came over there, we displaced up, right? Came down, made a swing high, right? We pushed up here, came and made this high, then we came down and we displaced up. And you see what I'm saying? We following the money. We looking at the swing points where the money getting involved. See, like these imbalances over here, these you know, money is moving the market around. So it's like, you don't want to look at it and be like looking for this pretty picture perfect little thing. You just want to look and say, oh, money moved us up here, right? Money moved us up there, and money moved us down there, right? So I got a swing high right there. And then when I look over here, right, I see a swing high there. I see a swing high there. Oh, this is an intermediate term high right there, right? And it's two things that can make a high and intermediate term high. Either having them two swings there. The other way that make it, I don't really use it like that. But when you coming back and when you feeling the imbalance, how we came up here into this and we feel this imbalance right there, that also qualifies it as an intermediate term high. But I don't like using that one. That one there, it caused me to look for stuff too everywhere. So I just like to focus on it when I can see it, where the money is moving like this right here, right? When I look for it creating a swing high throughout the move, because if you notice, it's just a higher high and a lower high. So you just got a big swing high or upside down smiley face, right? And then in the case of a low, right, it's just the reverse, an actual smiley face.
Right. I appreciate you.
You see what I'm saying? So yeah, and that and I think, yeah, you asked what made it that, and then you asked why was I waiting for. What was the other one?
Why you focused on that low rather than the
oh yeah, because that was the low of that move, and the way price, you know what I'm saying? And like now this right here is a watching the charts type thing, right? And I just want to say it again just for clarification for anybody who watching. This right here, right, was the whole move. You see what I'm saying? So if IPTA is going to punish somebody, right, it's going to come back and wreak the maximum amount of carnage, right? And so we got a balanced price range down here, right? So once we leave that area, right, we're anticipating that when we go there and go here and go there and go here and go up, we're anticipating that this low is safe. You see what I'm saying? Like that low is safe now. And when it took out this high and we barely poked above the buy side, and I was like, we gonna get this bigger retracement. I was like, you know what I'm saying? This is where I wanted to come, but I allowed it to go there because I'm looking for IPTA to create the most carnage. And I was like, I don't want to see a closure down there because a closure below here invalidates my idea that IPTA wants to go back up. You know what I'm saying? Because we didn't have so much divergence. And that little poke above could have been all that it wanted to do right now and then go back down because of all the divergence. But when I saw that we didn't get that, we got a strong rejection right there. And then everybody know how I trade. If we get a rejection off the low, my target is the high, right? Not saying we got to get there, but my target is the high. And then when I look from this low to that high, there's no imbalance in there. So all day long, my target is that high because we ain't got no imbalance to go back to and we got a strong rejection. So ain't nothing left up there but the high. You see what I'm saying? And It's just all about looking for opportunity to get involved. And we went to the lower time frame. That's when we saw the change of state of delivery here. And that's where you want to get involved at. You got a change of state of delivery. You go down to your 1 minute, right? There's your 1 minute break in market structure, retrace back to your imbalance. This right here, right? Go to the 1 minute. This is your 2022 model, not this. You see what I'm saying? This is because since the draw was up here, right? We came down, took liquidity, breaking market structure, retrace to a fair value gap. That's the 2022 model in this case, not the bearish one, not taking out that liquidity and coming back. You see what I'm saying? It's taking out that liquidity, getting your breaking market structure and coming back. You see, both of them the exact same thing, but the bullish one understands the draw on liquidity, whereas the bearish one was the liquidity. Did that help at all?
Yeah, that was helpful. I think it's just to add too. I think it's interesting. Like if you go to the hourly, and then you run your fibs from.
Let me get these brushes out the way. Get my smiley face out the way. All right. You said the hourly and what now?
If you go to the hourly and then you run your fibs from the swing leg. So from 10 p.m. Sunday.
You say 10 p.m. Sunday?
Yeah, all the way up to 10 a.m. today. Low? Let me see.
From this low to this higher health?
You
say 10
like, yeah. Like you'll see like it retraced like right at the 62.
All right, so let me turn my snap on. Hold on. So you say that the 10 o'clock candle?
Yeah, the 10 o'clock candle.
Okay.
Like where it started, like the high, that was the high, and then it retraced, and then it.
You said it went to like an OTE?
Yeah, it went to like 62. So I just want to add, like, I think, you know, we talk about the fibs and all that. I think that's interesting that it did that.
Yeah. Yeah. And this right here, this is, I'm glad you brought it up. This right here for anybody who trade OTE, right? This is another ICT concept. For anybody who trade OTE, OTE is just like every other ICT concept, right? You're not looking for OTE everywhere. You look for OTE when it is still a part of the narrative, right? Where if you're looking at this is your draw on liquidity, we talked about the other day. We said it's a liquidity pool up here above all these relative equal highs, right? So you want to get involved by buying in, right? You want to buy in the discount to get up there and attack that, okay? So you don't just chase price when price rallies up, right? When price rallies up and it starts to pull back, you run your fibs, and that's when you look for your OTE entry. This is the OTE zone from 62 down to 79, right? 62 is, you know what I'm saying, that's the highest risk to reward, but more likely to get picked up. This is the sweet spot. This is the lowest risk to reward, but you may not get picked up, right? So most people just default to the 62. Okay, now that you understand the liquidity is here, right? We've rallied up, right? Meaning we've taken out sell side. We got a break in market structure, right? Shift in sentiment, whatever you want to do, right? Because over here, we come up here, right? Y'all know how I do. Me personally, I'm looking at this right here as a shift in sentiment, right? Because this high didn't take out that low right there, right? But it's a shift in sentiment, right? You saying, okay, I believe we're going. Now, when we come up here, I look at this as that's the break in market structure because this high took out the low. You see what I'm saying? That high took out the low. So when we come back here and do that, that's a break in market structure to me, right? A lot of people just take this as break market. I ain't mad at you. You know what I'm saying? But for me, this has failed more times than an actual break in market structure for me. That's why I put a difference on them. I look at that shift of sentiment, price, give me a clue that it want to reverse, break in market structure. That's confirmation for me. But you got your break in market structure, right? You run your liquidity, your break in market structure, start to pull back, then you run your fibs on whatever time frame you watch. Right? On whatever time frame you watch. Then you run your fibs and you're looking for your OTE entry around there. And another thing, like with OTE, you don't have to know like if it's coming to a breaker, if it's coming to this, if it's coming to that. You don't have to know that stuff, right? But it enhances it when you can look and say, hey, I got a 62% right there that's lining up close to a bullish order block, lining up close to a mitigation block. You know what I'm saying? That can give you extra confirmation to say, hey, I like that. You know what I'm saying? I might not get down here because I got a bullish order block there that might stop my price. I might want to, you see what I'm saying? You can use the other concepts to then say, hey, I might want to take that at the 62, right? So yeah. I'm glad you brought that up, Sam, about the OTE, because you know what I'm saying, that's a concept I don't talk about a lot as with the OTE, because it don't really rely on knowing the PD arrays. It's just running your fibs and getting in at a 62, 70 or 79% retracement.
Okay, word. Appreciate it.
Yup. That's it. You ain't got nothing else for me?
I mean, I'll let someone else get the mic because I could keep going. So I just let
All
someone
right.
else.
Well, just hang out for a minute. Hang out there for a minute. If you got something, Sam. I mean, Sean done pulled up. If you got something else, just unmute again, Sam. What you got, Sean?
My question was just more about the steps to funding and understanding that. But I believe you have a couple of videos. Do those videos break it down kind of step by step, explaining kind of like the drawdown and what the different things mean for the different companies?
Well, every company gonna have their own rules, right? And you can they have different companies where let me see here. Let me pop this up. All right. Speak on. I really don't speak on the ones that I actually know. And then we're gonna go. Okay, so First off, we're gonna talk about Apex. this my OG. This the one I've been rocking with for a minute, right? So with Apex, a lot of people got much beef. They got L for Apex. They got much beef with Apex because Apex. Oh, hold on. Let me put us on the side because there you go. So, hopefully, matter of fact, I'm just gonna go full screen. Hopefully, y'all can see it. All right. So, blow it up a little bit for people that's on their devices. Okay, so now Apex, they have these are some of the basic rules, right? These are some of the basic rules. These are the rules that people automatically want to know. Like, how many contracts can I trade? What's my profit target? What's my drawdown? Right? Do I got an end of day drawdown? Do I got a trailing drawdown? Do I got a daily drawdown limit? Do I got a skid? Is it scaling? Any of that right there, right? Okay, so with Apex, right? They're always running some kind of sale. Like right now, they got 80% off. And if you want to, and if you would like to take your shot at Apex, I have an affiliate link in the description below. I appreciate you using my link. So, right. So they got different account sizes. Now, when it comes to funding accounts, right? I don't care what this says up here, right? You see people on Al Gore's internet telling you saying, oh, I got to account for 50K. I got to account for 100K or 250K. No, you don't. You do not have an account for that. You got an account for whatever your drawdown is, right? This is your account size because that's the only amount of money that you can lose, right? This is the only amount of money that you can lose, okay? So what this up here does, that gives you the leverage to trade, you know what I'm saying, so many contracts, right? And you can trade on the smallest one of 25K. This is the reason why I tell everybody to do the 25K is because this is the easiest drawdown to profit target, right? This 1-to-1, right? You got $1,500 in drawdown, right? And you got a $1,500 profit target. And as you go up, it, you know what I'm saying, it starts increasing, like, you know, like a, just say 1.2 or whatever, almost a 2 or what, you know what I'm saying, however much it is, right? So with Apex, all you got to do with any of them, all you got to do is not lose whatever your drawdown is, right? And hit your profit target within the days required. Now, Apex always running sales, and right now they got a 1-day pass. Most of them, they have a set amount of days that you have to pass it in, and most of them are going to letting you pass them in 1 day. All right. With Apex, oh yeah, and the evaluations, they are a recurring monthly fee. So with Apex, whatever you sign up, whatever discount you sign up with, right? So right now they're running 80% off. And if you get this 25K, it'll be like $29 and some change. So let's just say $30, right? If you blow it, or if you don't pass it within 30 calendar days, it's going to charge you $30 again, right? But if you pass it within, you know what I'm saying, the allotted days, or you pass it within them 30 days, you can do it. Right now it's from 1 day up to 30 days, 1 trading day up to 30 calendar days, and usually it's 7 trading days, meaning every time you take a trade, right? Calendar days is like Monday, Tuesday, Wednesday, Thursday, Friday, and trading days, I traded Monday, right? I traded Thursday, right? Monday, Tuesday, Wednesday, Thursday. That's 4 calendar days, but it's only 2 trading days, right? Because you traded Monday, you traded Thursday. Okay. So trading days is when you actually take a trade, right? So once you pass it, and then they have an assignment fee, right? With Apex, the assignment fee is different for each account, right? They have a monthly assignment fee for the PA accounts where you can pay $85 per month and it's recurring the whole time you got that PA account. $85 per month that they're going to automatically deduct, or you can pay a lifetime of $130 one time, and they won't charge you no more as long as you got that PA account. They won't charge you no more. Right? The first $12,000, the first $12,000 you withdraw with them is yours, and after you withdraw the 12,000, it's a 90-10 split, right? And yeah, so that's it on Apex. That's pretty much how it is on Apex. You buy it, you trade, you know what I'm saying? You set your own trading thing, but you just can't lose no more than what's here. They don't have a daily drawdowns limit, so you can blow it in one day, right? You can blow it in one day. There's no daily drawdown limit, and it's trailing drawdown. So meaning if you get into a trade and just say for your profit target on this trade, you got a target of $300, right? If it goes $250 in your favor and then it turns around and stops you out at $100, right? You're now $350 in drawdown because it went $250 in your favor. So your highest open position was $250. So it follows you. You see what I'm saying? Until you reach a certain amount. The drawdown follows you until you reach a certain amount, and it follows you throughout the eval. But once you get into a PA, once you get to $1,600, the drawdown stops following you in your PA account. So it's like it's a trailing drawdown until you get to 1,600, right? In this account. And then it's a trailing drawdown until you get to 3,100. And it's $100 over whatever this is, right? And so once it stops following you, then your stop loss is whatever the account is. Like, you know what I'm saying? Like if you get up to get $1,600 where you would be at 26.6, your new area to blow your PA account is 2,500. If you get back down to 25,000, you get back down to 25,000, you blow your account, right? So so that's how it worked with them, right? Fast track trading, right? They are what you call instant funding, right? Where you pay the one-time fee, right? With them, the 25K. This is the one that I'm doing right now. I really ain't been trading this. And the reason why I ain't been trading it because I have to use Rhythmic. I can't use Ninja Trader, and all my other accounts I'm using Ninja Trader, and it's too much for me to go over there trying to remember to trade in the Rhythmic and trade in Ninja Trader. So I haven't been I only traded 2 days in this account so far, but you pay the fee, right? So you know, I know some people look at it and be like, man, this is expensive. But when you think about the other companies, when you pay the assignment fee when you pay for the eval and then pay the assignment fee, you're paying the same amount of money. You know what I'm saying? You're paying it. So you just pay the for this account here is $179. Right now they're running 30% off, right? And it's instant funding, right? So with them, once you start trading, you're trading to try to make money, right? And they got a 20%. They got a 20%. Oh yeah, over here on Apex, they got a 40% consistency rule. So one day, not in the eval, there's no consistency rule, but in your PA accounts, one day profit can't be more than 30%. Yeah, it can't be more than 30% of your total P&L. So if you got $2,600 in P&L, right? You're qualified for, if you got $2,600 and you've had 10 trading days, you're qualified for a withdrawal. But if one of those days is a $900 day, they're going to deny your request because that $900 day is more than 30% of your $2,600, right? So it's a 30% consistency rule. With them, they have a 20% consistency rule, right? And when you get funded with them, right, it shows you the amount of contracts you can trade on each account, right? you can get up to 20 accounts with them too. You can have up to 20 accounts in Apex, right? You don't have to worry about scaling, just like with Apex. Okay. You don't have no trailing drawdown. It's an end of day drawdown, meaning as long as you don't go it's 5%. It's 5% of whatever the account is. So for this account right here, it's 1250 in drawdown. It's 5% of whatever this account balance is. So as long as you don't go in this account, as long as you don't go below 1250 on the day, you're fine, right? And if you can, your trade can go up to 300, it can come back down to negative 200, go back up to 800, come back down to negative 500, go back up to 350, and you close it, right? And then now your drawdown is it only moves up $350, right? It only moves up $350. So let me get a calculator so it can make sense, right? So if you got 25,000 minus 1250, right? So and when you start out, your the lowest your account can go is 23,750, right? So it can move all around. Your P&L can go up and down, up and down, up and down all day. And then at the end of the day, if you close it out and you're up $350 on the day, right? This is your first day, then your new drawdown is 24,100, right? Because you're only up 350 on the day. I don't care how much you was up. I don't care how much you was down, long as you didn't go past that 5%, whatever you close up in the day. And then just say the next day you take a loss of $100, your drawdown still 24,100, right? Because it stays 1250 from your highest end of day account. And a lot of people like end of day drawdown because with trade, a lot of people they don't scalp, so they trade be moving. Like with Apex, if you got a low trailing drawdown, if it goes really far and then start trailing against you, pull back really far, it can blow the account, right? If it goes in your favor, $800, right? And then it comes all the way back down and dips negative, that's going to blow your account if you only got $1,500 in drawdown. You see what I'm saying? Because it's going to think you had $800. And then if it retrace and come back down, you know what I'm saying, $700 against you, boom, your account blowed, right? But with them, that's not the case. And this is instant funding. And once you've been in there for 5, when you first get it, you can, if you make 20% of your 5%, so just say 1250, right, times 0.20. If you make $250 per day for 5 straight days, then you qualify for, you can take out up to $1,000 one time in that 5-day window, right? Because this 250, if you do 250, right, that's gonna give you 1250. Okay, and in the 5-day window, you can take out a maximum of $1,000 on the withdrawal. Once you take out that on that, if you do it in that 5-day, then you can't do that 5-day no more. Then you automatically on their 10-day cycle, and the 10 days don't have to be consecutive. It's 10 trading days. Whenever you want to trade, it's 10 trading days. No minimum trading days. You ain't got to worry about I gotta trade. It's 10 trading days, but you still got to have a 20% consistency rule over those 10 days, right? And they got a little fancy dancy spreadsheet that I had downloaded off of their hold on, this is my son. Hello. And Chris, I'm not sure what Chris ate, but I'm on live right now. So call one of them. All right. So yeah, and it's a little thing here, and I'm using it for all my accounts because it make it easy. See, remember I said I only traded 2 days. I only traded 2 days in this account. I had a day where I lost 400, and then a day when I ended up green 590. This was a horrible day, but I ended up green 590. So right now, I'm still far away from that 1250, but right. And when you put it in, you will see, but you still got to have like a 20% consistency, right? And this lets you know, this little spreadsheet lets you know if you within that and see, like right there, if I was to trade like that right there, right, then boom, I would be in that consistency window, right? Because with that 400 loss day, that 590 day, and if I had like 400 days for 10 days, then I'll be at 17%. I'll be within that 20% consistency window, right? And on the 10 day, I can withdraw up to $1,500 per account with the rally account, right? So I'll be able to request up to $1,500 per account, and with them after 30 trading days, or 6,000, I think it's 30 trading days or $6,000, then they review you to put you into a live account, right? Meaning you're trade live for them. Now, me personally, Timothy Lee Rogers Sr., I'm gonna go full screen with this. I would never trade as a live trader for any prop firm. And this is why. Because in my own personal account for Ninja Trade, then when I trade on Ninja Trader, I pay $12 a month for my data. If I go trade live for any prop firm out there, it can be Top Step, it can be Fast Track Trading, it can be Apex. They say they offer it, but I don't know of anybody ever doing it with Apex. Anybody, the data fees for a professional trader is like almost $200 a month. Why would I pay $200 a month for data to trade for you and do a profit split with you, even though I'm getting 90% and you getting 10%, when I could just pay $12 a month and just trade my own money and get 100% of my own money? So I would never be a professional trader for any prop firm. Now, my funded futures, right? That's fast track, instant funding, right? My funded future. Right now, my funded futures, in my humble opinion, right, has the best bang for the buck. Like, it's not showing. I don't know why it's not showing on their site like this right here. I don't know why it's not showing on their site right here, but they had they didn't update their site, but they did a revamp to their starter accounts, right? It was like a starter revamp. Let me see. New starter revamp right there, right? This is the revamp on the starter accounts right here. Where is it? Where the information at? So right here, there it is. Okay, so the revamp on the starter accounts is, right, you pay $80 for a 50K account, right? You got a $1,200 daily loss limit, meaning you can't blow the account in one day, right? You got a $2,500 max drawdown, right? And your profit target is $3,000. Now, what makes this the best bang for your buck right now, in my opinion, is total cost out the gate. If you pass this within 30 calendar days, all you paying is $80, because they remove their assignment fee. Excuse me, they remove their assignment fee off of the starter accounts. Back in the past, on their expert accounts, there was no assignment fee, but you had to pay $265 a month until you passed it. And with the starter accounts, you used to have to pay, right, for the there it is right there. I was on the wrong one, right? So you had to pay $165 a month until you passed it, and there it is, $80 a month for the 50K account. It was on 100K. That's why it wasn't showing, right? So $80 a month for that they have it says trailing max, but it's an end of day max drawdown, meaning at the end of the day, whatever your highest total is, it's gonna be $2,500 behind that, right? And then the max contracts you can do is 3 with them, and like I say, right now, $80. If you pass it within 30 calendar days, you all in, right? They got they reset fee is $50. So with them, it's cheaper to reset with them than it is at Apex, because I think Apex got like $85 resets, right? In the eval phase. Apex got the assignment fee, right? If you want to do a lifetime, it's $130. If you want to do monthly assignment fees, is $85 per month. And then this right here is just $80 all in. So, and then scaling, when you once you pass it, right? Once you pass it, they got a scaling rule for micros. It's like a scaling rule once you come in, and they also got a consistency rule. 40% is theirs is 40%. That's why I kept getting the 40% mixed up. Right now Apex is 30%. They said they might be switching to 40%, but right now they 30%. So those the different ones that I know. These the different prop firms that I know. Those are the rules to all of them. That's why I got links. I don't have I got a affiliate link for my funded futures, but I don't have it in my description. But I got affiliate links for Fast Track. It's in the description, but I don't talk about it a lot, right? Because this right here is like instant funding. And somebody actually used the link. One person actually used the link. I appreciate you there for that. But this is the one I talk about all the time. Apex. I got an affiliate link for that down there too. So Sean, did that help out at all?
Yes, sir. Thank you. I feel like I gotta study this like I do trading. So, but I appreciate the information. I took notes, so I'll be going back and kind of reviewing it, make sure I understand everything before I jump in. So I appreciate you taking the time to answer that.
Oh yeah, for sure. And Sean, let me ask you a question. Is this Shonister?
Yes.
Shonister, why you ain't say that? Why you ain't say that when you pulled up? You were supposed to say, Tim, this is Shonister, right? And for anybody who don't know who Shonister is, this is, you supposed to say, Tim, this is Shonister. I'm in the building. All right. I'm glad I can help out. I'm glad I can help out.
I appreciate you.
All right. Who else got something, man? Who else got something? Shout out Sam. Shout out Shonister. Who else got something? Let me see if there's anything in the chat. Kashaya, how'd you know why did you predict that it would be a deeper retrace and not a reversal? Because I thought I said that, but let me go back and try to clarify it. Okay, so let me put it on replay mode, and we're going to come back to there. Right, so right there. This right here was our draw on liquidity, right? This was our draw on liquidity right there. Okay. So, God dog it. Why y'all ain't say, Tim, we can't see your screen? All right. We got people on there, so I'm gonna have to put it on the side. I know y'all be like, Tim, we like it when it be bigger. Yeah, you got it small. Yeah, that. Okay, so this right here was man, the screen getting big, but the candles ain't doing nothing. This was our draw on liquidity. Okay, this was our draw on liquidity, and we said that above this was a big liquidity pool, right? Because we had engineered a whole bunch of buy side liquidity. Okay, as you see when we came up here, right, we barely poked above that high, right? So in the essence of running out this sell side liquidity down here, right? When we dug this deep and soaked up that much stops down here, that one little poke above that was not enough to offset all these long positions that we accumulated down here. Okay, so whenever we go up and we take out a predominant stop, right, that means that the market wants to keep going, right? But if we take out a intermediate term high or low, we will anticipate a deeper retracement because we've taken out such a substantial swing point that the market will often give a deeper retracement and then punish people who was on the right side, because the market don't want us to make this money. It want to use us as liquidity. You see what I'm saying? So when we get that deeper retracement, now when you said, how do I know it was just a deeper retracement and not a reversal? I don't know that. That's why I said I don't want to see a closure on the 15-minute below that low. If I see a closure below this low right here, right, and we don't immediately reject it, then a closure below this with displacement, if that invalidates me wanting to go up. That's my invalidation point, right, on the 15-minute, right? Because I said that, I said I'll take a wick below it, but I don't want to see a closure below there. So that's my invalidation point, right? And then see, there's the wick below it, right? And with that wick below it, now if we go down to the 5-minute right here, this right here was my confirmation that we are coming back up here. And why that is because this candle here took out this liquidity and closed below it. And then we immediately on the very next candle engulfed that candle, right? And that's what created that long wick on the 15-minute, right? So we immediately engulfed that candle. So right here, the open of this down close candle is now a change in the state of delivery, right? CISD. The change in the state of delivery is saying, okay, we have moved from bearish, right? And then I said, if we invert this SIBI, that's another type of change in the state of delivery. Why? Because this SIBI job is to keep price down. And if we trade up here and close above it, now you're saying, I don't want to go down. I want to go up. You see what I'm saying? Because you're inverting that. That's another type of change in the state of delivery. You see what I'm saying? And then a break in market structure is a type of change in state of delivery too. But that's why I don't know if it's going to be a reversal until it doesn't close down there. But I'm just anticipating it based off how the algorithm trades when we take out that intermediate term high, because we got a swing high here, swing high there, swing high there. That's an intermediate term high, right? Short-term high, right? That short-term high in the middle becomes an intermediate term high because of those two short-term highs on the side, right? Once we take out that intermediate term high, anticipating a larger retracement. When I get my larger retracement, now I don't want to see a closure. When I don't see a closure below my invalidation point, because a closure below this is going to give me a strong break in market structure. You see what I'm saying? A closure below this and starting to displace, that's a strong break in market structure because we're coming down with displacement. See, fair value gap. And if I get a 15-minute closure down there, right, then that's too bearish for me. Then I would have to wait for price to start proving itself again, So that's the reason why I anticipated it was because it took out an intermediate term high. I didn't know if it was going to be a reversal until it I said, hey, if we don't get this, I'm cool. If we get a closure below that, that invalidates it. Right. So I don't have a crystal ball. We don't know what price is going to do. We just look for the signatures. So regardless if it pokes or a stop run above that high, there will be a deeper retracement. So regardless if it's a poke or a stop run above that high, it'll be no. It's taking out that high right there is what makes me anticipate a deeper retracement once we start pulling back. You see what I'm saying? Like once we came up here and took out this high and started to pull back, that's when I'm expecting a deeper retracement because we took out that high right there, right? That's why I'm anticipating a deeper retracement. Now, the reason why I'm not looking for a reversal is because it barely poked above here. Right now, if we would have come up here, did this, right, and then started to break down, I'd have been like, okay, we done dug up in there. We done started breaking lows. Now I'm looking to go lower. You see what I'm saying? Off of that. But since we barely touched it and started to retrace, that's why I didn't want a reversal here. And then when it didn't give the reversal, I said, okay, my buy is still correct. We're coming back there. All right. I was just about to say, did it help? And you said, yeah, it helped. All right. Cool. We need a mentorship for funded trading. So if I blow the account, I would have to pay the price again. Hold on. We need a mentorship for funded trading. So if I blow the account, I would have to pay that price again to trade. If that is the case, I agree with you. Why am I going to give you my cash? Yeah. So if you're in a PA account, if you blow a PA account, you don't just go back to PA. You got to go all the way back to eval. Right. So if you blow a PA account, which I've done, if you blow a PA account, right, you got to go back to eval, pass it again, pay the assignment fee again, and you got to start all back over. So eval, you got to make 1,500. PA account, you got to make 1,600 before you can start requesting payouts. You know what I'm saying? And if you blow it, then you got to go back to eval, buy the eval, pass it, pay the assignment fee again. And if you blow it, you got to go back to eval. You know what I'm saying? So it's a never-ending cycle. Never-ending cycle. All right. What else we got? That's the only stuff I saw in the chat. Sam that came up with some hard-hitting questions. Sean that came up with some hard-hitting questions. What else we got? We've been on here an hour, right? I still got a little juice in the tank. Who gonna pull up?
I'll ask something real quick.
Mm-hmm. What you got?
So going back to the OTE, like if you look on the daily, right, and you go to the swing leg and the retracement that just took place, like it dropped literally to the 79, like the optimal, I think you call it optimal or whatever.
From which this low right here?
If you go for July 2nd.
Okay, yeah. So that low down
all the way up to what is it? July 16.
Yeah.
Like it retraced to the 79, right? In a what is it? A bullish order block.
Yeah. Mm-hmm.
So
got
it's
a
like
79% retracement down into this fair value gap into the order block. Yeah. So you got a few different things that you hit right there. You got an OTE 79% OTE. You got a fair value gap. You got an order block. You got a mitigation block over there, right over here. You got a bullish mitigation block over here. You got a few things in there. So yeah, you got 79% OTE there. Yeah. But go ahead.
Yeah. So like when things like that, like I'll do my review on the weekend on Sunday, but then I still found myself seeing stuff after the fact. You know what I'm saying? It's like to see that it's almost like damn, it was right in front of our faces. It's like how did I miss that? You know what I'm saying? But then it's like in real time, it's like I be missing it. You know, so like how do you catch that in real time and not see it after the fact? Because it's easy after the fact, but like in real time, like I want to catch that consistently.
It's staying. It's there's no magic wand to that because price moves differently every day. So it's just it's looking for the signatures and risk management. It's looking at the signatures and risk management. Like me, the way I participate in stuff is I when it comes I have like I got time frames that I use, right? I use the weekly, the 4 hour, 15 minute, and the 1 minute, right? And the way I use them is like my weekly, that's my 30,000 foot view of what the market doing, like how we looking at these daily charts right here.
Mm-hmm.
And I'm gonna come back here before we go into that 79%, right? So and in this case, since we're looking at a daily chart, I'm gonna do daily 1 hour and 5 minutes. I do them 2 time frames apart. Okay, so daily 1 hour and 5 minutes. So looking at this right here, right? We've done our weekend analysis, and this is Thursday. So back here, right when the chart was here. Oh no, I need one more day. All right, so all right, when the chart was there, we did our weekend analysis, right? We did our weekend analysis and we were looking at it and we said, okay, we went up here and we made a high, but we closing off of it a little bit. So we look like we may get a retrace back. So now we got our fibs run, right? And we see that we have this fair value gap there that's at equilibrium, right? And we got this fair value gap here that's in between inside the OTE range, right? So we like to trade OTE, so we're eyeballing this, right? We're eyeballing this because we like to trade OTE, and if we get a retracement back, right, that'll be an area we're looking to get long off of, right? And then we also see that we have a fair value gap there, but we notice that it's inside this balanced price range. What make it a balanced price range? We offer buy side, sell side, and then we left it, right? Once we leave that area, we're not looking for price to want to dig back down into this, right? We want to see price come back to the imbalance after leaving the balanced price range and go back up. That's lining up with our thesis of this is in the OTE range, right? This is in the discount. So that's lining up with all of that right there. Okay. So then we also see that we got us a mitigation block over there, right? And then we got us a bullish order block here. And then we got another order block here that's acting as a propulsion block, right? What make that order block a propulsion block? Because it's inside of like we went up, right? And we're inside this order block here, and then price displaced away from it. So, right, we got this bullish order block and that bullish order block there, because this is when we went up, pull back, right? And then once we went up above it, we got our bullish order block there, right? So this one is inside that one. So since it's inside that one, right, you just look at that as your order block, okay? Because it's inside it, right? Now that we see all that, that's our daily time frame that we looking at. That's our 30,000 foot view, right? And so let's put a little meat on the bone, right? As we're coming down, right? So now our fib, we made a higher high, right? So our fib is adjusting to there, right? And now, so we're coming down, we come down there into this fair value gap here, right? And we get a rejection off of it, right? We get a rejection off of it. So now that we got that rejection off of it, now we want to watch our, since these are daily candles, Now we want to watch our hourly time frame, right, to see if we can get like a setup, right? If we can get a setup, okay? And then here we continue down, right? We continue down there because we're watching this because we see, okay, we came down, we get a rejection off, but we closing below this low, right? We're closing below this low. We close down there in the discount, and then we come down here. Right now, we come down into the order block. We're inside the balanced price range right there. We come down into the order block. So now we like, okay, it's digging a little bit deeper than I really like for it to dig, but we still inside this fair value gap, which lines up with the theory of if one fair value gap in the price leg fails, we anticipate all of them to get ran through, right? And so we push down through all of them. Okay, that all lines up, that all makes sense. But like once we get all the way down here, like at this point here, right, we reject back up, but we still had a strong closure down, closing below this low right here, right? So we're watching it and we come down. Now that we come down here, right, and we get down, we're deep in the OTE thing. Now you want to be watching on your hourly time frame, right? You're watching on your hourly time frame, looking for a signature that, okay, price wants to go back up, right? Price wants to go, like price wants to reverse here. And we just gonna put the meat on the bone for time's sake, right? Well, that's pretty much good there, but I'll just put it all the way over to current price, right? And then we'll put a line here at the start of this day, so we'll see what's going on, right? So all right, so at this is the 6 o'clock start right here. That's the 6 o'clock start right there on the evening. Okay, so when we come down here, right, price drops down here, right, and we're coming into that fair value gap, right? And as we see there, we're coming down, we're engineering this liquidity up there, right? We displace down, take out this sell side. Okay, you take out the sell side, and then when you come down here into that fair value gap, now you're starting to wick off. So you're watching this right here. This is at the end of that's at the end of that Friday there. You're right. You wick off. You watch, you say, okay, price act like it don't want to go any lower, right? And so the next day when we open up, we come up here above this high right there, right? And we trade back down into this liquidity void, and then price during the London, price starts to displace up. You see what I'm saying? Price starts to displace up during the London, right? So when it starts to push up during the London, it keeps going up all the way up into 9 o'clock, right? All the way up into 9 o'clock. And then right there, remember what I said earlier, this right here was a shift in sentiment for me, right? Because this high didn't come take out that low, right? If this high would have come and take out that low, me personally, I would look at that as a breaking market structure. But since we came up this high, we just came there, right? That high didn't take out that low, right? What just happened? Right? That high didn't take out that low. I just look at that as a shift in sentiment, right? Ain't nothing wrong with that because that's a sign that, hey, price wanting to reverse. But when we get up here at the breaking market structure, now my second time frame, this is my structure time frame. My structure time frame has given me a bullish breaking market structure, right? So now that my structure time frame has given me a bullish breaking market structure, right? Now my third one down is my entry time frame. So now I'm looking at my entry time frame and I'm looking for my entry, right? And so now this plays right into, because we was watching the 5 minute earlier, right? We was watching the 5 minute earlier. So for my entry time frame, we've come up and we've taken out that intermediate term high, right? We've taken out that intermediate term high. And so now that we're taking out an intermediate term high, we're anticipating a a deeper retracement. You see what I'm saying? We're anticipating a deeper retracement. So now when we get our deeper retracement here, right, we're just looking for our entry, right? Whatever your entry model is, I talked about different entry models for, you know what I'm saying, the time being. That was like a what's the name there? We had a move there, what yada yada yada, whatever. You know what I'm saying? Different ways to do it, but that's how I look for it in real time for the like the intraday entries. But if you're looking at it for higher time frame, if you're looking at it for higher time frame entries, then you would just when price comes down here, right? You see, if you're looking at 62%, right? Soon as price comes down into that imbalance right there, you just get long as price is trading down into that, and then your stop is down there. On any type of OTE, no matter if you get 62, 70, or 79, your stop is down here at the 1, right? At your stop is down there at the 1. So you would just get long in there. If you buying calls, if you're swinging futures, whatever you're doing, you just get long. If you're playing Forex, whatever it is, anything where you can hold overnight, you just get long there with your stop loss down there with whatever your reward target is up there, and you just go. So with OTE, it really is just a matter of, hey, this is what I'm expecting this retracement back to here. I'm just going long. When it get there, at this point, I got my price points, right? The fair value gap is at 55.85. The 62% is at 55.85.75. I'm getting long at 55.85. You know what I'm saying? Or you can say I'm getting long at consequent encroachment of the fair value gap, and that would give me a split between the 70 and the 60. So I'm getting long at 55, 75, 50 when it trades back down into there. You know what I'm saying? Whatever, however you want to play it. But when it comes to see it in real time, it's just about trusting your weekend analysis and then watching the signatures that price give you. You see what I'm saying? Like when you trade in the OTE, you don't really have to look for a lot of signatures, right? Because the OTE, you already decided you want to get long at this retracement. And the only thing that invalidates your trade is going down there to your stop point, right? But when you're looking for other entries based off of other PD arrays, then you got to look at stuff like, is this a true break-in market structure, or are we just retracing back to a discount? You got to understand what the draw on. For all of them, you need to know what the draw is. But when you're looking at all the other ones, you really need to understand, okay, the draw is up here, so I'm not going to get tricked by this bearish break-in market structure because the draw is up here, right? But if you, like right now, we're treetop tall, and we don't have any structure to look at, right? We don't have any structure. So I don't have anything to validate. I want to get long at a 62% retracement on this right here because I ain't got nothing to validate to the left over there. You see what I'm saying? So me personally, you know what I'm saying, I wouldn't be trying to trade OTE to go long back up to these highs because I don't have anything to validate it. You know what I'm saying? And we're moving into like a weak seasonality, and then the NQ starting to act weak. The Dow is still weak. You know what I'm saying? It's starting to perk up a little bit, but it's still weak. So, you know what I'm saying? But
so wait, when you said you don't have anything to trade back up to, like you wouldn't say like, oh, I'm gonna trade back up to that breaker right there.
I mean, you could, but if I'm looking at a daily OTE, I ain't trying to just go back to there, right? If I'm looking at a daily OTE, I'm looking at the highs.
Right.
Any OTE, you know what I'm saying? Any OTE, I'm looking at the highs. I'm not looking at, like, you know what I'm saying? I don't have a reason to come back to this high right now. You see, because I don't have no structure to look at over there outside the fact that we've just been bullish, That's the only reason why I got to go back to that high. And that's, I don't have any structure to say, okay, yeah, we want to go back to that high because we got a monthly fair value gap up here, or we got a liquidity pool up here. There's nothing for me to validate why we're going to go back up there. You see what I'm saying? You see what I'm saying? Nothing to validate that, because we start to pull back and we got a daily breaking market structure with two SIBIs back to back, right? And then when we look at the weekly, right, we've inverted a weekly fair value gap. Last week we came down and inverted the weekly fair value gap, right? But then we traded into a weekly order block. So right now, you know what I'm saying, we in between conflict and PDRAs, right? With this weekly close, we inverted, move all this junk out the way, right? With this weekly close, right, we inverted that weekly fair value gap right there, right? So we inverted that weekly fair value gap with a strong weekly close, right? And then with this weekly close here, right, just based off the candle, I would anticipate maybe an open high low close candle, mean like a down close candle, right? Not meaning we got to die off, but I would look for an open high low close. And since we opened up today and went up, right, that start to play into that narrative. We can just keep blasting off and run up for 5 days straight. I done seen it plenty of times. You know what I'm saying? We just go up for 5 days straight. But with the when we look at the sisters, you know what I'm saying? When we look at the sisters, right? This is the weekly chart on the NQ, right? And then we go over to the Dow, right? This is a weekly chart on the Dow. You see what I'm saying? So the Dow got a strong rejection with a weekly fair value gap there. So I would anticipate us drawing into that, but I would want to see an open, high, low close. You know what I'm saying? I would want to see a down close candle. And the Dow started up today, right? The NQ started up today. And man, I can't believe, do we really got a gap like that on the NQ on the weekly? Man, I didn't even look at the I ain't look at the NQ weekly chart this week. I guess I didn't. No, I did. Oh, you know what? Yeah, I had turned my settlement off. I'm like, man, this don't make no sense. But I forgot I was talking to somebody and turned my settlement off. Right? So yeah, that makes sense now, man. Yeah, put my settlement back on. Yeah, my settlement off, man. Messing me up. Yeah. so yeah, there you go. So there we go. We inverted that fair value gap there. Right, the NQ, right, we got a weekly, right, we took out the weekly low, got a weekly breaking market structure, we got the potential of making a SIBI, and then the Dow we pushed up and we rejected that high. So you know what I'm saying, looking like it may want to pull back into this right here, right? And the Dow is super close to the true year open. That's a quarterly theory thing, but that's the April open there. The Dow is just barely got back above the April open, whereas the NQ and the ES passed that way back in May, right? Way back in May, they passed the April open. You see how much divergence we've been having. You know what I'm saying? This is the April open for the Dow, April open, and the April open down there. But that's what I mean when I was like, I don't have anything to, besides the fact that we just been bullish. I don't have anything that says, yeah, I really want to go back up right now. You know what I'm saying? Like, even if we do go back up, I don't have anything technically to support that, because the weekly has a bearish move, right? Inverted a fair value gap, right? And then plus, this was the last up close candle. It closed above that high. The very next candle engulfed that. That's a bearish move, right? So looking at this right here as a change in the state of delivery right there, the open of that candle right there. Okay. And then on the daily, right, we got a daily breaking market structure right there, because this low pushed up and took out that high. So now we got a daily breaking market structure with two SIBIs pushing out, you know what I'm saying? So that's a bearish move. Now, on top of, now we're in between the tail of two cities, because we've traded back into this range right here. And that range there is coming off of this institutional sponsorship. And so all of these fair value gaps, order blocks, and mitigation block, all this right here job is to protect that low right there, right? This job is to protect this low. So if we pull down, right, I would want to see us get down and get a closure below that, right, with some type of imbalance over here to be looking for lower prices. But if we come down below that and reject off of it, then I want to see how price trades back up. And if we got like a high here, how do we trade at that high? Or if we can even get back to that high. You see what I'm saying? Because now we're starting to form structure. We're starting to get structure now, right? Because if we come, just say we come here and then drop back down, now, right, we're on the sell side of a market maker sell model. You see what I'm saying? On the daily, right? If price was to do that, now we're on the sell side. And why do I say that? Because this right here, like technically right now, if you were aggressive, you could say we were on the sell side now, because this right here, right, you can argue as being an initial consolidation for a new market maker buy model. If you're aggressive, you see what I'm saying? If you're aggressive, you can say, hey, that's the initial consolidation for a new market maker buy model, right? But I ain't that aggressive, right? I would need it to come here below that area of accumulation, right? Below that. And is Tish in here? Is Tish in here? I don't know if Tish in here, but who can tell me what price engine model is this area of accumulation? Which one is this? Who can tell me that? This price engine model right here, right? Y'all put it in the chat. Tish, what is it? What price engine model is this? Right there at this area of accumulation. Which one is that? Do you know it, Sam? Do you know what price engine model that is right there at this area of accumulation?
Manipulation.
Nah, come on, Tish. Nah, that ain't manipulation. Come on, Tish. Come on, Tish. Offset is when we sweep the liquidity. What's the other one? If we would have come here like that, that would be offset accumulation. This is reaccumulation, right? Because we displaced up, pulled back to an area of fair value, and then took off. That's the price engine model of reaccumulation. Offset accumulation would be pull back, sweep the lows, and then display. Offset accumulation give you the Judas swing, right? Offset accumulation is giving you the Judas swing, right? This is our area of accumulation right there. We're not dropping below it, right? Here's our whole area right there, right? So we're pushing up, pulling back into it, and then pushing up, right? So that's reaccumulation on that price engine model, right? And then so now that we're up here, right? So if we come up here, we got right there, we got a breaking structure there. That's why I say if you're aggressive, you can say we're on the sell side already, because right, we came over here, we can this right here. This is offset right there, Tish. See right here? See how we accumulated here, and then we pulled down below that low and took off. That's offset accumulation right there, right? So you got offset accumulation right there. You got reaccumulation there. You got reaccumulation there in these areas of accumulation, right? So you got your niche consolidation, accumulation, second stage accumulation, and right here, this right here can be seen as your smart money reversal right there if you're aggressive, right? Because we push up and then we drop, get a break in market structure, right? With displacement. That can be seen as your smart money reversal, right? And then this could be seen as a low risk short, right? So if you get an opportunity for a low risk short right there, right? I don't say we're in a sell model until after the low risk short. right? Once we get the low risk short and break down, now I split it. Now I split it, and I'm like, okay, now we're in the market maker sell model, and I'm looking to come over here and reclaim order blocks. Come over here, reclaim order blocks, and then hit the terminus. Right. So for right now, looking at the daily chart, I see structure trying to form for a bearish argument, but we still haven't invalidated the bullish argument yet. So that's why I said, me personally, I wouldn't be trying to get long here on an OTE, right? Because it looks like a bearish argument is forming, and that lines up with seasonality, but I'm not acting on the bearish argument until my confirmation of a low risk short where price trades back up. Like I wanted to see it. I want to see an open, high, low, close on the weekly, right? So I got my first update, right? I would even take a nothing day trading up into that order block. We can even leave that as a breakaway gap. I don't care. But then the rest of the week come down and give me my close lower on the week, along with, you know what I'm saying, taking out that liquidity. So now I see, oh, I got a low risk short. So now I'll be looking for an opportunity to trade down and come back in and getting short off of a reclaimed order block over here, right? Come back into a reclaimed order block over there, right? Come in. It can be this one right there. It can be there, right? Because that's the last up close candle, right? On that move before it moved down right there, right? It can be that right there. Reclaim that order block and then push down, right? Something like that. But I started rambling. I'm sorry. I can't remember what you had said, Sam. I started rambling. I'm sorry.
No, you good. That answered it. That answered it.
Okay. All right. But yeah, it's and like there's opportunity to trade in the range, right? There's opportunity to trade in the range, but you just wanna look like I lost Sam. But there's opportunity to trade in the range, but you just wanna understand the conditions that we in. We're in high resistance conditions, and like today, I shared something with the Discord, right? I shared something with the Discord. I said, remember to never get greedy. Take your base hits and move to the sideline. Moral of the story is that Rome was not built in one day. Small, consistent gains is the key. You see what I'm saying? And I shared this screenshot right here where on the NQ, I mapped out a trade here, right? So we had come up and then we had a retracement back down into this order block right there. Right when we traded back down into the order block, when we came up and inverted this SIBI right here, right? We inverted. I don't know if I can make this bigger for y'all. Right. So when we came, right, we pushed up and then we traded back down into this order block right here, right? This bullish order block there. And then we came up when we inverted this SIBI right there, right? I got long right there at this volume imbalance right here at this fair value gap, right? And you see I got long there. Right, my stop was right there at the low of the candle of that fair value gap because I didn't want to put it all the way down here, right? I wanted to get a decent risk to reward. I didn't want to put it all the way down there because I didn't want to have to force it to have to go far above this high because of the conditions that we in. So I said, okay, this fair value gap, right? It shouldn't get down to the low of that because we got this down close candle there, right? We've inverted this fair value gap. So I'm willing to take the risk from there to the lower that candle, right? And then I got out up here, right? I got a technique that I do where I scale in. I scale in once I get the momentum. If I'm taking like a short hit, right? And as you see over here, right there, I actually got in on the low of that candle. Right over here, I put it. Yeah, that is the low of that candle. Okay, so I put it on the low of that candle, right? So yeah, so I got in on the low of the candle right here, right? And then I put my stop down here at the low of this candle. And then once price came up and broke this high right here, right, I added another contract when price went through and broke that high, right? And I just took that off of the momentum, right? I took that off I'll scale in when it comes to, like, I got a thing that I do where I know how much I'm trying to profit, and I know at how many points, right? If I put another contract on at this many points, right, when it hits my target, I'll be over what I want. You know what I'm saying? I'll be over what I want. And so you see over there, when it hit my target, it was at 525, right? It was at 525 when it hit my target. So initially I was going to put it on at the red candle right there, but I was like, a lot of times they like to retest after it trades above the down close candle. So I was like, once it get that little retest, then I'm gonna go in at the high. And so that's what you see there. I went in once it passed that high, and then once it hit my target, I had the profit that I wanted based off of, you know what I'm saying? That's just like a momentum thing that I do sometimes. But I said all that to say is take your base hits, right? Take your base hits. Don't try to understand the conditions that you're trading in, right? Understand the conditions that you're trading in, and don't get greedy. Just take, we in high resistance conditions right now. The market is very choppy, is very volatile, and the ES and the Dow, the NQ and the Dow has been at odds for a really long time. It's been at odds for a really long time. All right, hour and 36. What else we got, man? Y'all got anything else? If y'all ain't got nothing else, man, I guess we can wrap it up. If y'all ain't got nothing else, had to jump off. Thanks for doing this, Tim. I appreciate you. Appreciate you for pulling up with the hard hitting questions. Hold on, let me see if anything else in the chat. Do you still trade options? If so, how do you choose your entry and exit points? Whatever, like I trade, when I trade options, it's gonna be the SPY or the SPX, right? So, or the QQQ. So whatever I'm looking at, just say I'm watching, we're gonna say this over here is my trading platform, and this is the ES chart, right? If I want to get long on this area right there, as soon as the ES come down to this area, I'm just buying a call over here at the money, right? If my target is this high right there, when it trade back up to that high, I'm closing my position over there, right? I ain't worried about what the strike price is, what it is now. The only time I'm worrying about what the strike price is if I'm doing it on a longer term basis, right? If I'm doing it on a longer term basis where I'm buying it for like 6 months or a year, then I might, you know what I'm saying, see like, okay, am I going to do it in the money? Am I going to do it at the money? How do I want to do it? Then I'm plan that out. Okay, when the daily chart do this right here, then I'm gonna get me an entry on that right there. But if I'm just day trading or just trying to get in something to hold it for like a couple of days, I'm watching the intraday price on the ES. As soon as it come to my fair value gap, soon as it come to my order block, soon as it come to my whatever, click, I'm buying over there. That's how I plan out that's how I do my entries. And all the exit points is based off of the PD arrays on the ES chart. Once I hit that PD array, I'm gone. I'm closing the trade. Right. And then if I have to, like, just say if I have to get in something where I got to hold it overnight, then I just set a target for a price that I'm good with taking. And if the next day we gap up and it closed the trade, okay, I was good with taking that price. You know what I'm saying? But if we gap down and the trade still good, then I might go in, and if I be like, okay, look at the chart, we'll probably get that price. I'll leave it there. I'm good on that. Or if I know we still got some room to run on it, I might adjust my target. I might lock in some profit. It just depends, but it's all based off of the ES chart, how I'm gonna my exit point for my SPY SPX option. Yes. It's gonna be on the it's on the YouTube page. It's on the YouTube page. What's up, said Banks? Hey, I guess that's it. I don't see nothing else. I'm gonna take me a swig of this high quality H2O, and if don't nobody else pull up with nothing, we're gonna call it. You're welcome to Black Al Davis. You're welcome. Wells J Rock. All right, that's been plenty enough time. I appreciate y'all for tapping in. Hey man, Rilo, what's happening? Shout out my homeboy Alan West, man. I got back in touch with one of my partners from way back when I was a young man with no gray hair, about 50 pounds lighter. About 50 pounds lighter. Yeah. But hey man, that's it. I appreciate y'all for hanging out with me. Today is Monday. Yes, today Monday. So I'll see y'all tomorrow morning at 9 o'clock for the overnight price action. Mentees. Wednesday night homework review is at 7 p.m. Please pull up with your hard-hitting questions, right? Please pull up with your hard-hitting questions. Again, this Friday is the last official educational video for the mentorship. It's going to be on the Power of 3. As long as anybody's in the paid portion of the mentorship, I will continue to do the Wednesday night homework reviews. I will continue to do the Sunday Q&As, right? When the last person drops out of that, and I will continue to do the tape reading. When the last person drops out of that, all of that stops. Yeah. Y'all enjoy y'all evening, man. Look here, haven't said this in a while, but it's very necessary because ain't nobody promised tomorrow. We just had some more tragic news in the family, right? So take advantage of the day, man. Let your loved ones know that you love them today because ain't nobody promised tomorrow. Nobody. You know what I'm saying? Don't say it, don't confirm it, say it, show it, and confirm it. I say, don't say it, don't confirm it, say it, show it, confirm it. Y'all know what I'm saying. Make sure they understand that you love them and speak in their love language. Open up the line of communication so that you know if they are a words of affirmation person, don't go buy them gifts. If they're a physical touch person, don't give them words of affirmation. Speak in their love language so that they can receive the love that you're trying to share with them. If your parents are still here, please call them, let them know, hey mama, hey dad, I was thinking about you. Go by there, see your mama, take a trash out, go wash your daddy car, go cut your daddy grass, do something. Let them know that you appreciate them. You are appreciated. Dear mama, let them know. Go in the next room, man. Hug your spouse. Hug your spouse. Hug your kids. Hug the dog. Kick the cat. Thump the gerbil. Whatever you got. Show some love to your family members, man, because ain't nobody promised tomorrow. And with that, that brings us to the end of the, what do we call this? Where's my thumbnail? What do we call this? Oh, They Not Like Us Q&A session. Shout out Lumpford for coming up with the name of tonight's event. The They Not Like Us Q&A session. I appreciate y'all, man. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. Where my stuff at, man? Why I can't find my stuff? Why can't? Oh, there it is. Share my thoughts on this thing we call price action. Y'all be safe out here in them trading streets, man. I'm gone. Yeah.